Are you feeling a little overwhelmed by taxes? Yeah, you are definitely not alone. But what if there was a completely legal way to lower your tax bill? Well, there is. In this explainer, we're going to demystify Canadian tax deductions so you can understand exactly how they work and, way more importantly, how they can work for you. So let's just dive right in.
Let's just start with the big question, right? What if you could legally pay less tax? The answer is simple. You can. Absolutely. This isn't some secret loophole or a complicated trick. It's all about understanding tax deductions. And that's the key to keeping more of your hard-earned money right where it belongs. With you.
Okay, so to kick things off, let's get right to the heart of it. What even are tax deductions? In this first part, we're going to break down the absolute basics and show you why they are your #1 tool for saving money when tax season rolls around.
So here's the official definition. A tax deduction is really just an amount you're allowed to subtract from your total income. And why does that matter? It's simple, really. The less income the government taxes you on, the less tax you might have to pay. It's a really straightforward idea with a huge impact.
This slide shows you exactly what I mean. Think of it like a seesaw. Over on the left, a big stack of deductions helps lift up your savings, which means your tax bill can go down. But on the right, with fewer deductions, that tax bill feels a whole lot heavier. Our goal today is to get you on the left side of this picture.
All right, on to our second section, the two-step income journey. To really get how deductions work their magic, we're going to follow your income on a little trip through a tax return. This is going to show you exactly where and how they fit into the whole puzzle.
Okay, so here's the path your money takes. First, deductions take your total income, that's everything you made, and they turn it into something called net income. Then, another round of deductions can take that net income and turn it into your final taxable income. Let's look at each of those steps.
So, the first stop on this journey is step 3 of your tax return. You start with your total income, all the money you earned all year. Then, you subtract that first set of deductions, and what you're left with is your net income. This is the very first time we see deductions starting to shrink those numbers.
Now you might be thinking, okay, net income. So what? Well, this number is super important. It's not just a pit stop on the way to figuring out your tax. The Canada Revenue Agency, the CRA, uses this specific number to figure out if you're eligible for key benefits, like the Canada Child Benefit or the GST/HST credit. So, a lower net income could actually mean you get more support.
And now for the final stop on the journey, step 4. We take that net income number, we subtract another possible set of deductions, and boom, we get to the finish line, your taxable income. This is the big one. This is the actual number that your federal and provincial taxes are based on.
Okay, theory is great, but let's see how this actually works in the real world. For our third section, we're going to follow the story of someone named Haru to see exactly how just one simple deduction can change his entire tax situation.
All right, so here's our starting line. Haru earned a total income of $22,000 for the year. This is the number before we apply any deductions.
Now, it turns out Haru is part of a union, and he paid $300 in dues last year. He actually finds this amount right on his T4 slip, which is the summary he gets from his job. This is a super common deduction, and it means he can subtract the full $300 from his income.
And just like that, here's the result. After subtracting that $300, Haru's income is now $21,700, and since he didn't have any other deductions, this becomes both his net and his final taxable income. He's now going to be taxed on this lower amount, all thanks to that one little deduction. See the power?
So now that you've seen the kind of impact a deduction can have, let's move into our final section and build your very own deduction toolkit. We're going to look at some of the most common deductions that you should absolutely be aware of when you're filing your taxes.
So, what's in this toolkit? Well, we're going to cover some of the big ones. Money you put into your retirement savings, union dues just like we saw with Haru, the cost of childcare, and even the expenses you might have if you had to move. Let's take a quick look at each one.
First up, saving for your future. If you contribute to a registered pension plan, that's an RPP, through your job, or to your personal registered retirement savings plan, an RSSP, you get to deduct those contributions. You'll find the amounts on your T4 slip for an RPP or on your official RSSP contribution receipts.
Next, union dues. Hey, we just saw this with Haru, right? If you pay dues as part of your job, you can deduct them. The amount is usually spelled out for you nice and clear in box 44 of your T4 slip. Easy peasy.
Now, this one is huge for parents. Did you pay for daycare, a nanny, maybe even summer camp so that you could go to work, run your business, or go to school? Well, if your child is under 16, you may be able to claim those costs as a deduction.
And finally, let's talk about moving. If you moved last year, you might get a deduction. But, and this is a big but, you have to meet two very important rules. First, the move had to be for a new job or to go to school full-time. And second, your new place has to be at least 40 kilometers closer to that new job or school.
You know, a lot of us use tax software, and it's an amazing tool. It does all these calculations for you. But it is so important to remember this. The software is just a calculator. At the end of the day, you are the one responsible for what's on your return. That's why understanding this stuff yourself is so powerful. It puts you in the driver's seat.
So, let's bring it all home. The goal here wasn't to turn you into a tax accountant overnight, but to give you that core knowledge you need to walk into tax season feeling confident.
So here are the 4 things I really want you to remember. 1. Deductions are your friend. They reduce your income to lower your tax. 2. Remember that 2-step journey, from total to net to taxable. 3. Keep your eyes peeled for those common deductions we talked about. And 4, and this is the most important one, you are in control. Always review your return.
So I'm going to leave you with one final question to think about. Now that you've got the basics down, what deductions are you going to look for this year? Just asking yourself that question right now is the first step toward a smarter and hopefully a much happier tax season. Thanks so much for joining me.